Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Each year in June, the reconstitution of the Russell indexes takes place in what's called the Russell Reconstitution. On Friday, June 24th, roughly $12 trillion in investor assets will be rebalanced. Last year, nearly 2.4 billion shares and $80 billion were traded at the close of the Russell Reconstitution. After markets close on Friday, June 24th, the changes become final and the updated indexes begin running Monday, June 27th, when markets open. For the 19th consecutive year, the Nasdaq Closing Cross will be used to rebalance Nasdaq-listed securities in the entire family of Russell U.S. indexes. The rebalance is designed to ensure that the Russell U.S. indexes continue to accurately reflect the ever-changing state of the U.S. equity market and its segments. Joining me, as they do annually, to discuss the importance of the Russell Reconstitution to the market and investors is Ed Coughlin, Director of Trading Services at Nasdaq, Catherine Yoshimoto, Director of Product Management at FTSE Russell, Nick Kalivas, Head of Factor and Core Equity Product Strategy with Invesco ETFs and Index Strategies, and Stephen DeSanctis, Head of U.S. Small and Mid-Cap Research at Jefferies. It is great to see all of you as we do each year. And Catherine, I'm going to kick it off with you. Why is the Russell Reconstitution so important for the U.S. markets and investors?
Thanks, Jill. You actually summarized it very well. Russell Recon is the annual rebalance of the Russell indexes, and essentially the membership of the indexes such as the large cap Russell 1000 and small cap Russell 2000 is reset. So membership in the Russell indexes is based on the size of the company and where it ranks relative to other eligible stocks in the U.S. market. So it's important for the Russell indexes to capture changes that have occurred and to add new companies that have become eligible to enter the indexes since the prior reconstitution. We talked about the assets tracking already and the volumes that traded at the close. So as you can glean from those numbers, passive and active fund managers and traders are following the Russell indexes. They're preparing for the annual rebalancing changes to the indexes. And they are looking forward to these changes taking effect at the close of June 24th.
Ed, what's significant about the Nasdaq Closing Cross? How many shares are expected to cross notional value, and how long does this massive transaction take?
Well, if I look back at history, with regards to the cross, I look at 2 years ago, we did 1.6 billion shares with a notional value of $57 billion. And then if I look at last year, we did 2.4 billion shares with a notional value of, $81 billion. So, certainly there's records to be broken. If they're there this year, great. If they're not, depending upon the activity going into the close. If I look at the close process itself, you're looking at those transactions that take somewhere, and it's, kind of, I'm old school, but about a second. The transaction is executed, it's reported to the tape, customers have all their fills back. And then, we sit around and kind of applaud what took place.
Stephen, what does the Russell Reconstitution provide for investors?
So I think it is the reset of what the definition of size segments are: large cap, mid cap, small cap. More importantly, for my client base, the long only community, a lot of that comes down around the sector weight. What's changing? Growth to value, value to growth. This year, the big one is going to be energy, where it's actually no longer considered a value group. It's actually moving over to the growth indices and becoming bigger parts of folks' portfolios. In contrast, consumer discretionary becomes more of a value group. So it's the resetting of the sector weights and then also the cap ranges that, that get reset as well. And that's very important for our client base to stay true to their disciplines.
And Nick, explain how the rebalance impacts a couple of your ETFs, which rely on the Russell universe for their underlying factor composition.
Yeah, so in the case of EQAL, which is equal weight, what's going to happen is this reconstitution is going to essentially determine the names that are in the index, and then we're going to get a new weighting of those names within the index. And it's also going to impact the sector weightings that take place within there also, because it's equal weighted by sector and then equal weighted by name. In terms of OMFL, it gets a little bit more interesting. Not only is the universe pool changed, so we have kind of new eligible names in that universe, there's also going to be a reconstitution of the different factor indices that are present. So each name is going to be reassessed for how much, does it look like it's value? Does it look like it has momentum? Does it look like it has low vol? Is it smaller in size within that universe? And that's going to be key to the makeup of the portfolios that are then essentially matched to the economic regime that is present in the marketplace.
And Catherine, what are some of the major changes happening to the indexes this year?
Well, first of all, the closely watched breakpoint between the Russell 1000 and Russell 2000 indexes declined to 4.6 billion from a record high of 5.2 billion in 2021. This reflects the market volatility that began late last year and also demonstrates why we reconstitute the Russell indexes annually. In fact, our global investment research team recently showed some new research showing a 67% correlation between this breakpoint between the Russell 1000 and Russell 2000 indexes and the US GDP. Some additional changes include 19 IPOs being added to the Russell 2000 with the highest number of companies, 6 companies coming from the healthcare industry. There are no IPO additions to the Russell 1000 index this year. And, you know, building on what Steve talked about, sector shifts resulting industry shifts are relatively minor. They are an outcome of the bottom-up roll-up of the indexes. So we're not managing the sector weights, but the industry weights are relatively minor. However, the 6 energy companies and 4 consumer discretionary companies moving up from the Russell 2000 to the Russell 1000 will result in the largest weighting decreases for the Russell 2000 indexes, and other industries within the Russell 2000 will see weighting increases as a result.
And Catherine, what role does transparency play in the Russell Reconstitution process?
We like to call Russell Reconstitution one of the most anticipated and orderly index rebalance events because of the transparency we provide into the methodology that we use and the communication that we provide to the market into what's changing. Our transparent and thoughtful reconstitution process includes using primary exchange closing prices from both NYSE and Nasdaq to complete this year's Russell Indexes reconstitution. So we're looking forward to, you know, the Nasdaq supporting with the closing cross mechanism and NYSE's auction prices to execute shares for each stock at a single price on Friday, June 24th.
So Ed, since we've been covering this together as a panel, we continue to break records at the close for the Russell Reconstitution each year. And you said it takes less than a second. We kind of breathe a collective sigh of relief. Is that concerning at all? What happens behind the scenes for this massive transaction to get executed?
Well, one of the things, as Catherine points out, the trade is kind of long advertised. So they do a very good job of letting the street be aware of what stocks need to be bought, what stocks need to be sold. There are, you know, market participants. You know, obviously there's, you know, the people that need to, you know, buy stocks that are being added to the index. They need to sell stocks that are being deleted. They are pre-positioning those based upon price movement leading up until that day. They're prepared for, you know, the close itself. You know, and if I look at how the trade actually occurs, I mean, all day long, if you look at trades on NASDAQ, the average trade size is less than 200 shares, yet we're able to trade, you know, billions of shares, you know, in single transactions, you know, at the close. And that speaks volumes of the liquidity providers that we have that are prepared to see the imbalances, to react to those imbalances. And if you look at, you know, many people look at, you know, as opportunities to enter or exit positions based upon the volumes. And as Catherine said, with regards to transparency, NASDAQ, you know, continues to evolve the cross process. We think we have the best cross process out there with regards to transparency and the information that we transmit to folks. And I think that gives people the confidence to be able to trade in such large sizes towards the end of the day. That being said, no one should take for granted, you know, and especially NASDAQ doesn't, that, you know, the amount of time, money, and effort that we put into ensuring that the cross is successful, it's transparent, and it's efficient, and kind of meets that, you know, ability to be, you know, a dynamic, you know, price discovery mechanism. We're really proud of that, and we're proud that, you know, lots of firms partner with us to achieve, you know, best execution outcomes.
And Stephen, let's talk about fundamentals for a moment here, particularly in your space, the small and mid-cap space. What's happening under the surface there? And of course, let's talk about active versus passive and what's been a volatile year in the markets.
Yeah, so I think for the Russell Reconstitution, I think the big thing here is that Catherine mentioned, you know, a handful of IPOs. I think one of the other things that happens is that some of the SPACs that have now de-SPACed are going to come into the universe. So there's about 130 de-SPACs, 125 of them come into the small cap universe. So it gives investors a new list of ideas and something to kind of focus on. So it's kind of a fresh start around that. I think it's been a tough year from an absolute standpoint. However, active managers down cap have done a pretty good job in holding up and outperforming the benchmark in a very tough environment. And quite frankly, I've been floating out the idea about, golden age of active management, especially down market cap, where active managers can beat the benchmark going forward. Coming out of 99, 2000 tech bubble crashing, we tended to see active do very, very well. When volatility is a little bit higher, with lots of new companies in the universe, I think you have a good chance of beating the indexes down cap. And so I'm actually a little bit more positive about, the active forefront for managers, especially down in small cap. And quite frankly, if I look across the 9 Lipper boxes, 7 out of 9 are doing well on a year-to-date basis, which, so it says something. Unfortunately, again, absolute performance has been lousy, but at least on a relative basis, people have been holding up a little bit better.
And Nick, we'll give you the last word here. From the perspective of an issuer, how important is this process when it comes to communication with the street, the transparency that the closing clause provides for you?
Yeah, I think it's very important because it helps the portfolio management team set up for this, position the portfolios correctly, and helps it all go very, very smoothly. I think what is important is this really puts a highlight on the ETF structure and the ability to have that high potential to shield capital gains from a big turnover in the portfolio that happens. So the transparency and that process really helps the portfolio management team execute that efficiently.
All right. To my Russell panelists, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.